Okay, more examples. During this move, I have nothing to do. Okay, according to this strategy, there is no setup here. Okay, guys, we dropped, but did this drop touch or get inside the moving average area? No, it is far from it. It is far from it. So I do nothing here. But what about this? We try to go higher again and drop again. After this drop, we have finally touched our beloved moving average area. And with the touch here, this is like an alarm to be ready, be prepared to initiate a long position if we find the conditions we are looking for. Do we buy here at this red candle? No, there is, well, probably, yeah, you can do that. You can do that, but I will not blame you if you skipped it. What is the reason to buy here? We buy here because we touch the area and we closed above the top of the area. So we touch it, we close above the top of the area, and that's one of the three conditions to go along. If you don't buy here, it's okay. I will not blame you. If I was your mentor, for example, or coach, I will not blame you for not buying here, because we are still in a streak of red candles, and I want to see something moving before I have the guts to get in and take a long position on this one. So here we touch it and we close above it. That's good. But what is better is this beautiful, beautiful candle. As you can see, after the drop, the price rose again, and this time we have ourselves a bullish candle engulfing and green also. We met two of the three conditions, but unfortunately the limit is very near and very close, or the minimum limit. The minimum thing to expect from this trade should be, of course, above this, and we closed here. So what are we talking about here? Maybe 10 pips, 15 pips, and of course when I say above, you need to add maybe 10 pips above that. So we're talking about 20 pips overall from this close to the target. We buy at this close, we place a limit at 20 or 25 pips, and it reaches here. That would be perfect for a small and a quick trade on the hourly chart. Of course, if you believe in your chances and you want to take a risk, you could, but in this case I would really recommend always to move the stop to protect your profits. So if I see this, if I buy here, I would say to myself, I will place the target on 25 pips. But if you are sitting with me and you say, you know what, I think by looking at other things on the chart, the wave count, the Fibonacci, the RSI, I think we are in for more than 25 pips. I said to you, okay, but when you start to see a profit, you need to protect that profit. After it reaches 25 pips or 30 pips, you don't want to close, it's okay. To me, this is a target. I close at 25 pips. But if I don't want to close at 25 pips, what do I do, guys? What do I do? I have been saying this over and over again. Protect yourself. Protect your winning trade. Don't let a winner turn into a loser. When you have a winning trade, you always should protect your profit. So my trade is in 25 pips of profit and I don't want to close. Okay, I have no problem with you. Just move your stop to 5 pips of profit, 10 pips of profit, and leave it. If you do so, you are lucky enough not to hit the stop here, then the price will continue moving higher and you will be a very happy man. Of course, when the profit rises and increases, you need to rise your stop. So for example, if at 30 pips I'm placing my stop at 10 pip profit, when it reaches 50, I move it to 20 or 25 of profit, 25 pips of profit. When it reaches 70, I move it to 30 pips of profit, and so on. Okay, guys, we're running out of time, so just a couple more examples, and we will be done. This is I have several examples, and my intention was to give you examples that are bullish and bearish, and that cover most of the main time frames that we analyzed. This first setup, or first example, is a bullish example on the hourly chart. The next one is a bearish example on the daily chart. This is in New Zealand dollar against the US dollar, or the Kiwi, and this is the daily chart, and it's full of setups. Let me go through them quickly. A closed half, yeah, ski, yeah, that's a great way of looking at it. You can close half of your position and keep the other half if you are hoping for more profit. Of course, great thinking, buddy. Okay, this example is full. It is loaded with setups, you know, not just one, but many setups. Okay, we have a falling move. The price retraces up. We get inside the moving average area. When we got inside it here, there's no reason to short here because the candle is still green. But here we have our first trigger candle. First of all, this is a red candle, and the second of all, it is a doji. So on the close of this day, we take a short position. If you have not done so, you also have a trigger here because we have a red candle that looks a little bit like a shooting star. Of course, the ideal form of the shooting star would be a longer upper shadow, but with this small shadow, we can still call it a shooting star, but it's not ideal. Okay, here we have another one, and finally we break out of the area and we have a close outside the area. Also, here is a trigger, and we start moving lower. The initial position should be opened around 70.20 at the close of this day, and the price moves higher, maybe to 70.50, so we have a 30 pip loss here, but we do not close. Do we close here, guys? Tell me, do we close here? Of course not. Why is that? Why we don't close with the 30 pip loss that we see here? Because the price does not trade above the top of the moving average area. The top is the red trend line. We have no trading above it. We have no close price above it. So why close it? We don't have any kind of reason to close this short position. We sell at 70.20, and our target is a good target because we should drop below the bottom of the previous price move. This is the previous price move. This is its bottom, and the bottom is around 68.50. So we are talking about a minimum of 170 pips, and these are the trades that make you feel, this is what I'm looking for, this is what I'm in for in the market. You know, 25 pips and the previous example are great. They are amazing. 25 pips, great. But what about 170 pips on one trade? That is real something. Of course, when such targets appear, you need to tolerate the kind of time we need to reach them. So this is a daily chart, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, 9, 10 trading days till we get to our limit. But with that trade, of course, once it's in profit, we can protect it. Where after reaching like 30 pips, we place a stop at 10. When it reaches 50, we place a stop at 20 pips of profit, and so on. When you protect your trade, you can leave it and throw it on the shelf and focus on other business, because now you have zero risk. When your stop is in profit, you can go on and open another position without adding risk to your account. And this is very important. Once I protect my profit, then the trade is safe. I can open another trade. Right, guys? So we have the first setup here. The price moves lower, and once again, more of the same thing, an attempt to get inside the area. We do not get inside the area, or we do not touch the area with this attempt, but with the second attempt, we touch the area here. We touched it, and we closed in the red. This is your trigger candle. And if you miss this, you also have trigger here, because you have touched it. Again, a red candle closing below the bottom. Here we have a red candle closing below the bottom. So if you sell here at around maybe 67.80, or here 68.10 or something like that, in both cases you are following this strategy. And just look on the the drop that followed. Beautiful drop, more than 100 pips. That is more than 200 pips actually, from 68 to around 65.50. That's like 200 plus something pips. And of course, we may not be able to harvest all this move, but at least we need to place this the limit below here. This is around 66.90. So we sell at 67.90. The limit should be below 690, and that gives us a profit potential of at least 100 pips. At least 100 pips. And now it's another time to remind the guys that were asking yesterday, how can I make 1,000 pips in the market? Here's 100 pips in one trade. Okay, guys? Another setup, of course, is this one here. The price started rising again. We do not have a touch of the area here, but we do have the touch of the area here. And from the first candle, we have a short because we have closed below the bottom of the area, and this is a bearish candle because it's a spinning top. We talked about spinning tops. They are the candles where there is an upper shadow, lower shadow, and a very, very small body. Okay, so at the close of this candle, we sell maybe 66.90 again, and the minimum target would be this bottom. It's maybe 67.70. So we're talking about 100, another 100 pips here, 100 here, 100 here, 100 here, 300 pips on one instrument in 1 month. That is only by trading the Kiwi, and in less than a month, or in about a month, 3 setups. Each of them is providing us with a chance to make more than 100 pips. Actually, the first we said that it's 170 pips target. The second and third 100, 100. So our close with the minimum is close to 400 pips on these 3 trades. And you still ask me how to make 1,000 pips a month? I hope you got your answer. Okay, guys, we are really running out of time, and I just want to talk quickly through these 2 or 3 examples that we still have. Okay, this is a weekly chart. The dollar-yen rising price, drop here. We do nothing because we did not touch the area. Here we are still above the area. Here we got inside the area. First week we do nothing. Why? Because it is a red candle. Okay, it might be a spinning top. You might want to try your luck here, but no one would blame you if you wanted to wait for this strong candle. It's first green, and second it closes above the top of the moving average area, so buying here is good. The stop should be, of course, below this area, and the limit above this, the top of the previous move. So, for example, if we buy at 98.50, our limit should be at least 104. My God. So we are talking about 400, guys. 450 pips minimum target. Are you thanking me right now? Not yet. I have shown you a strategy that can give you 450 pips in one single trade. But of course, this is a weekly chart, so you will have to wait a longer time for this target to be reached. So we buy here, we buy on the close of this week, but if you skip this, it's okay, nobody can blame you. When you see this green strong candle, you will have more courage to buy, and when you buy, you will have to just look at this beautiful move and count your blessings and have that confident smile on your face, waiting for the price to trade above 104 from 98.50. I'm sorry, guys, I miscalculated that. It's just above 98.50 to 104 is 550 pips, not 450 pips. So we are talking about a gigantic profit potential just by waiting for the price to drop to the moving average area and waiting for one of the three conditions that I have told you about. Another position, of course, another setup. Here is the setup. Quickly, I will just talk about it. Rising move, then we retrace, we drop inside the area. First green candle, we buy. We also dropped again. We have dropped here and moved inside the area for a few weeks, but not one close below it, so no stop. If we have closed below this, the bottom of this area, then we would have been stopped out, but fortunately for us, this area holds and the price moves higher. And when buying here, for example at 102, we should expect the price to go above 105, the previous top. This is a 300 pip move, you guys. 300 pip move. So on one chart we have a 550 pips and a 300 pip move. That is absolutely amazing. The next example is bearish, and it is a 15-minute chart. I wanted to include different time frames so you see how this can be implemented on the 15-minute chart, hourly, 4-hour, daily, weekly, anything you like. This is the Canadian dollar, the loonie. The price drops, the price starts rising again. We do nothing here until we touch the moving average area. This is a green candle. So although we closed below the bottom of the area, if you did not sell here, no one will blame you. But it is a sell because we closed below the bottom of the area. However, you may want to wait for a stronger bear sign, which is a red candle with a closing away from the bottom. That is great. We sell here or here, and not a lot of difference because this is only a 15-minute chart. Maybe there's 10 pips between this and that. This is 33.15 to 33.05, so it's actually 10 pips. However, the thing I want you to know with these time frames is that the target will not be huge. So when I sell at 33.05, I want my limit to be below 32.85. Okay, that is if I sell here, that's 30 pips. If I sell here, that's 20 pips minimum target. Of course, I can add like 10 pips to the minimum target. So my target area would be here. Not a lot of profit. 80, this is 80, so I placed my limit at 75, 70, 80, anything like that, and make 35, 30 pips, 25 pips, and call it a day. Of course, in the previous chart we have seen that we needed weeks in order to reach the 550 pips target, but on the 15-minute chart we only need a couple of hours to reach the limit. And with this, we come to the end of today's and final day in this week-long event. I have had a great time, you guys. I have been very lucky to talk to you all. The last comment that I will be reading is by Ski10. You need to really patience on setups on your preferred time frames, of course. Of course, patience is a virtue in the financial market. It's a great thing to practice. And I hope that I was saving, by the way, I was saving this strategy for the last day because it's absolutely one of my favorites, and it usually gives great signals. And when it stopped out, the stop is relatively small and acceptable most of the time, because all I need to see is for the price to go beyond the moving average area. I buy inside the area, and just when it gets out against the direction I'm watching for, we close the position with a small loss. But the profit potential, as you saw, is huge, especially when you are talking about the daily or weekly charts. 550 pips on the yen, 170 pips on the Australian dollar, and so on and so on. So with this, we come to the end. Seems very stress-free on higher time frames. No, I love your comments, Ski, but I have to disagree with this. Within the candle that you see moving smoothly, of course the price is going to go up and down, up and down, an hour up, an hour down. But on the weekly chart, you can see that the trend is moving smoothly. But inside this 1 week candle, the hourly, 4 hours, and 15-minute charts will show you fluctuations up and down, up and down. So it's not, there's nothing risk-free, but I agree that it's easier, a little bit easier when you focus on the longer time frames, of course. Welcome, Ski. Your thanks mean a lot to me. Please keep in touch. Never too late. I'm happy that you feel this way, and your very kind words mean a lot to me. I always find joy when I see people happy about what I present, and you made my day with your very kind comments. Thank you very much. Keep it up, bro. I think you will be a great trader because I can see how much you love the market and how much effort you are putting there. You are following everything I say, and you have your 2 cents and you have your opinion. I love that. Keep it up, bro. Read more, watch more, and educate yourself, and you will be one of the great traders.